Hey everybody, welcome back to the Thursday Night Financial Thing live stream. Obviously, happy holidays to you all. We missed last week because it was a holiday week and I took a week off, but I am back after a pretty short trip over to the UK to have some meetings, see some family, do some crimbo, eat some turkey, eat some roast potatoes, Yorkshire pudding. You know, it's always something I miss doing if I'm not home in the UK for Christmas. But it's been a good trip. We're going to talk about a lot of things tonight. I hope everybody is well. Thank you for joining the stream tonight. Please hit that thumbs up if you can. Subscribe to the channel. Helps out. Every little thing helps. Every little click, every little like, every little subscribe. And don't forget about the holiday giveaway, which you still have time. We're going to be announcing that next Thursday. We'll be announcing the winners. All you have to do is either join the Discord. The link is in the description of this video. Or if you're feeling a little more generous, become a Patreon member for as little as a cup of, I'd say 1.5 cups of Cafe Nero or Costa or a Starbucks. You can support Financial Thing and my endeavors to educate people financially all over the world, which is what I continue to try to do. This is why I do this channel. It's certainly a lot of work, but I love every minute of it. And we're going to be talking about many different things tonight. May go a little bit longer than an hour, just a little bit. Peer-to-peer financial news. We're going to be covering some stories like that. We're going to look at assets capital. What is going on in my manual lending portfolio? I keep getting asked for updates on assets capital, so I'm going to log in. I'm just going to show you so you can see it with your own eyes what's going on there. We're going to talk about my meetings in London with LoanPad, Kuflink, and Plend, which I always say Plend. But I had a good meeting with those 3 different companies. I'm pretty excited about the things that I found out. We're going to look at where am I going to be investing for 2022 with the way that things are with the economy, and everything seems overinflated. All the prices are high. Stock prices and valuation seems high. Some cryptocurrency things going on there. We'll look at the Trading 212 portfolio. Be the last update before 2022. See what's going on with that. And also talking about Wealth Simple for anyone that is interested in robo-investing. They are going to be ending their service, which I started as an experiment in 2014 in October to really track exactly how well do these robo-investment vehicles do compared to if we were just to DIY invest ourselves into, say, a Vanguard index fund. So that experiment will be coming to an end as they announce they will be closing to UK customers and moving everybody's accounts over to a different company. I decided to pull the plug. I think 4 years of history, actually over 4 years of history with them, is going to really show how much better you can do DIY investing versus one of these robo companies. And of course, they're not all the same, but Wealthsimple was a good experiment, and I'm going to show you the final results on that. So quick hi to everybody on the stream who has commented. If you haven't, let me know where you are watching today from, or this evening. Darren is here. First up, Chimp O'Naughty in Cambridge. Colin in the Peak District. We got Paul Bagworth in Kenilworth, aka Baggy, Baggy. Alan Toombs is here. Alan Stratford. Happy New Year's Eve. Yes, that's right. We're almost in 2021. It's crazy how fast the year has gone. I know. I think as we get older, it seems to go faster. John Morgan in Swindon. Arthur Atchison, of course, is here. Happy New Year. Paul New in Stockport. Peter Vince is here in Leatherhead. Philip Waters in Milton Keynes. Dave Dawson, of course, in Staffordshire. Carful from a very tropical Essex. Yeah, I've never heard Essex being described as a tropical, but that's a good way. I like that. I like the positive spin. The only thing I know about Essex is the Towie, right, which I've never actually seen. Film Core, that is Mem tuning in, I think, from London. Neil Circuit from the Isle of Wight. Oh, nice place to tune in from. Close to my neck of the woods. Sue Lund in a very hot and sunny Tenerife. Very nice place to be. Dave Ellards coming to us from the Midlands. And yes, so hi to everybody. Again, hit that thumbs up if you can. It only takes a second. Really helps out a lot. Let's get right into the news, and then I'm going to talk about my meetings that I had in London with those 3 peer-to-peer lending companies. I did want to have more, but unfortunately time was pretty limited, so we will talk about those. Let's get right into the news. Let me pull this up here and zoom in a little bit, see what's going on here. And we had quite a few postings of financials for the end of year for some peer-to-peer lending companies, and I think this news story is going to really highlight why Zopa is shutting down its peer-to-peer lending arm. Obviously not a profitable venture for them. They posted an £8.5 million loss. So it says Zopa's peer-to-peer lending business swung into a pre-tax loss of £8.5 million last year due to a reduction in lending volumes and a move away from charging of upfront fees. This compares to a $575,000 profit from the previous year, according to Companies House documents. Loan originations fell from £1.07 million in 2019 to just £456 million in 2020. And I think this really highlights why Zopa decided to put the kibosh on its peer-to-peer retail lending, because it's realizing that being a bank is way more profitable than retail peer-to-peer lending. And this is something that I chatted a lot with both Kuflink and LoanPad about. Can retail peer-to-peer lending actually be a profitable business for these companies? And we talk a lot about scaling. Once these giant companies scale to such a massive size, they obviously have to employ more people. A lot of them had big office spaces that were expensive in London. And they realized that simply scaling the way that they wanted to with these retail peer-to-peer lending businesses just wasn't profitable. And that's why you're seeing, after all this time, sort of the plug pulling on the big 3, at least the big 2 for now. And then I think Funding Circle will probably follow suit by ending their peer-to-peer retail lending business, I would imagine, next year. That's just my opinion. But so Zopa, again, posting a pretty bad profit. On the other side of things, Crowd Property swinging actually into the black with their Companies House reportings and their filings of their accounts. Crowd Property posted £635,000, £617 profit in the year to the 31st of March 2020. That's compared to a loss of £206,399 the year before. And Crowd Property said, however, that they will be showing a loss in the next financial year because they are growing. They're putting more money into the investment of their technology, making their team bigger as far as employees and hirings, and also spending money on branding, advertising of the company. So you're going to see probably that profit again go into a loss for next year as the company grows. But they do seem to be one of the peer-to-peer companies that is actually doing things correctly and is really growing in a very positive way. So, and also, I've heard many good things about Crowd Property, not only in the news, but also from other peer-to-peer lending company heads and employees who do say good, positive things about Crowd Property. So hopefully that will continue on into the future and that business will continue to grow. Then we got the Lending Works, another reporting of how they've done in the last 12 months. And this one is nasty. Consumer lending company Lending Works reported a loss of £1.279 million for the 12 months to the 31st of December, down from a £1.87 million loss in 2019 and a £2.1 million loss in 2018. So they have a total of £10.5 million in losses since the inception of that business. Again, another just example of why LendingWorks pulled the plug on their peer-to-peer lending business. Retail-wise, they just can't make it pay. And so they are going institutional. They're going to try that route, and hopefully that works out for them. But again, just another example of how scaling can be so difficult for these larger peer-to-peer lending companies, which is a shame. I mean, ultimately, we would like to see these companies succeed, not only for you as an investor, but for the industry as a whole, because I think it is a good industry still. But LendingWorks has not been able to show a good profit. A little bit of positive news on a pretty stinky situation, but lending investors repaid another £2 million. They were collectively paid out £1.98 million in the 6 months to November the 23rd, while administrators' fees rose by £499,000 over the period. I mean, this is just pretty gross when you think about it. There are 21 live bridging loans outstanding, a value of $27.6 million, and 15 live development financing loans with an outstanding value of £79 million. So we got over £100 million of outstanding loans that still have not been recovered yet. Probably most disappointing about this is that RSM, who is the administrator, they have managed to rake up £4.4 million in fees since 2019. So that's a pretty lucrative little run for them over a period of 2 years, including investigation time. So £4.5 million in administration fees for RSM that they have been able to pocket from this, with no end in sight. Again, I have pretty much written off that my investment through lending loans is probably going to be wiped out. So I'll be using it as a tax write-off for the next few years. Unfortunate, but it is what it is. See what else we got. Is property peer-to-peer lending taking over? I think this is probably yes, it is right now, because if we look at the main companies that are doing well in the peer-to-peer lending space at the moment, they pretty much are all based inside of property, if not 100%, at least a good portion of their business. Even a company like Assets Capital, which has securities on property through their loans, but LoanPad, Property Base, Crowd Property, Blend Network, PropLend. So pretty much most of the companies, Lend Invest, of course, not peer-to-peer strictly, but very much property-based. So it seems like that these companies have found the way forward within the peer-to-peer lending space. Hopefully, it, again, continues to be profitable. And then, of course, Kuflink on top of that. So is peer-to-peer property taking over? Of course, yes, I think that is a definite yes. Folk-to-folk and Crowd Property, which have loan books of £495 million and £223 million of loan book values in total since inception. So pretty decent sized loan books. Of course, if you talk about that in comparison to other investments, is relatively small, but within the peer-to-peer lending space, certainly a decent size. Property Partners raised dividends following the Better acquisition. This company, Property Partner, just seems to really be meandering around at the moment. There isn't really any strong detail on what's going to happen with this company going forward, but they are cutting its assets under management fee from 1% to 0.7% per annum, which, in the grand scheme of things, it's pretty small cut. Doesn't really make that much of a savings for investors. But also dividends will increase by at least 1/3% for all dividend-paying properties effective from the 5th of January 2022. And the company also said that it plans to significantly increase the average dividend yield on the portfolio from 2.4% to 3.2% per annum. The thing about Property Partner is one of these companies that seems to be just really dead in the water at the moment, and hopefully this acquisition by Better is going to provide some kind of a way forward. If you're a property partner investor, you'll go into your account, look at how much you paid for shares. Probably, like in my account, I've been buying shares through Property Partner since I think 2017, and some of the properties that I bought shares on are now significantly valued share-wise a lot less than what I paid for them. So it's more of a case of just sitting and waiting, seeing what happens, and hopefully this property partner is not going to suffer the same consequences as some of the other peer-to-peer lending companies that couldn't make their way forward. Going along with my meeting here with Mr. Robert Pascoe you can see him here on the right smiling. He was the person that I met in London from PLend, but he has named the Crowdcube co-founder as an executive chairman of PLend. That is Luke Lang. He, from what I understand, is a pretty smart individual, so he has been named as the the executive chairman of PLend. So I think that's a really, really great hire for PLend. They are doing some pretty innovative things with credit scoring, and they're going to be launching in, I think, about March or April of 2022. So good amount of experience. Obviously, Crowdcube has been a pretty big success, and having the co-founder on board with PLend is a pretty big deal. This is a pretty negative news story, but one worth paying attention to. Over $7.7 billion of cryptocurrency has been stolen this year. That's 5.8 million pounds of cryptocurrency. This is just something that goes along, unfortunately, with the space, and you do have to be careful. There's a lot of scammers out there, a lot of people purporting to be people that they're not. Unfortunately, there are some people that fall for these scams, particularly email scams, phone scams, and whatnot. Not only does it happen in cryptocurrency, it also happens within the peer-to-peer lending side of things. We can see here a company called Buy-to-Let Cars, which is a company, again, that I actually spoke to a couple of years ago. They were trying to get me to promote and get them on the YouTube live stream, and I just really wasn't feeling good about something about that phone call that I had with them. And it turned out that this company was pretty scammy. And you can see here there was a report by the administrators of Buy-to-Let Cars, which is Radex Consortium. And the administrators have released their initial report, which revealed that out of every 6 cars invested in by Buy-to-Let Cars investors, 5 didn't exist. So if there ever was a Ponzi scheme within peer-to-peer lending, that was definitely it. So they were taking on money from investors and just not buying what they were supposed to buy with the money. That's a pretty big no-no, and the FCA shut them down. The total number of known loan agreements is 3,609, relating to 834 unfortunate investors. However, the number of vehicles held by the group is only 596, so it turned out there were a lot more loans than vehicles. I could never really get my head around the idea of, as I thought more about it, buying assets that were depreciating in value every month, which is what a car is. And I definitely made that mistake early on in my peer-to-peer lending career when I invested through some cars that were purported to have very low loan-to-values, but turned out necessarily wasn't the case. I did not personally invest in buy-to-let cars myself, but I do know some people that have, unfortunately. And the worst thing about it is here at the bottom of this recovery prospect information, the total of £48 million was taken in from buy-to-let cars investors. £902,000 in cash has been recovered so far. And administrators are expected to realize only $4.2 million from selling the vehicles, and around £400,000 from the lessees, so people leasing the vehicles. So another thing is down here, it says the directors of Buy-to-Let Cars, Reginald, Larry Cole, and Scott Martin, owe a total of £804,000 to the group in directors' loans And they're also trying to establish who owns a Rolls Royce that somebody was apparently swanking around in. So, lesson learned, there are scams in every form of investment. We've seen it in the bond market through London Capital Financial collapse. We saw it within the Woodford, Neil Woodford equity fund collapse. We see it in cryptocurrency. It's just the way it is. It's not only in cryptocurrency, but it does exist. We have to be careful because there are thousands and thousands of cryptocurrency coins that are absolute poo-poo that you do never want to put your money into, and 95 probably percent of these coins are going to go to zero at some point. But be aware of the scams that are out there. Do not give your passwords to people who email. Just be careful. That goes for any type of financial account. Some financial companies are better at their securities than others. For example, Vanguard is very good. I've had my own personal experience of my personal account, which is currently in limbo because I apparently cannot remember the phone number that is on the account, which was an old phone number I put on there a few years ago. And in order to make some changes to my account, I have to remember the phone number. So they do lock down the accounts pretty good. There are other financial companies that do not have as good security on their accounts. So be very careful when you're dealing with any type of financial accounts. And if possible, do two-factor authorization or authentication through things like Google has an authenticator. I think Assets Capital does a good job with the way that they have two-factor authentication on there. And it just really locks down your account to make sure that you don't get scammed, or if for some reason your email gets compromised. Some financial accounts, all they require is a password, and you could do a password reset through an email address. So if your email gets compromised, that could actually compromise your financial account. Now, the good thing about cryptocurrency is they actually have some of the strongest security on accounts that I've seen that you can sign up for. Things like Coinbase, which has two-factor or authentication. Oh, look, my little thing is saying the temperature is rising. It went up a lot, so my little mining machine there, which has actually been really good, by the way. I'll do an update on that soon enough, probably January. I was just trying to look at my score. It's not very good today. We were at, I don't know if you can see that. We tend to be around 90 to 95, but today we're at 65. I don't know if there's dust in the air or whatnot. But anyway, let's take a little chat about the meetings that I had in London, not to get too far off topic. But on December the 8th, the 18th, I landed in London after a very tumultuous flight over from the US through Canada. Finally made it, lost my bags, didn't have the bags for 3 weeks. Sorry, 3 days. That was an over-exaggeration. But still, that doesn't stop us wearing the same clothes that I landed in. The next day on the 19th, I headed off to Gravesend to the offices of Kuflink, which were very quiet because of Omicron. Everybody is apparently working from home. There were a few people in the office there, but I had an hour sit down there with Narinder, the CEO, and we had a really good chat. We talked about a lot of things, about Kuflink's positioning, how they are going to continue pretty much on the same path with trying to write as good of a underwriting on their loans as they can. The goal is to double the loan book, hopefully to reach £200 million by the end of 2022. I think personally that's going to be a challenge because of what's going on with the COVID issues. And scaling can be difficult within peer-to-peer lending. We seem to see there are some hurdles as to getting those larger loan books. It means you got to take on more employees, and there is always that fight to trying to keep your costs down and trying to expand the loan book to where you can be very profitable. But that is Narinder's want. He does want to try to double the loan book to £200 million by the end of the year. And they're really not deviating from where they've been able to build up their business from, which is just write good quality loans, keep a really tight hold on, making sure that the loans don't go too far past their due dates, which they've got Natalie Weeks over there, head of that side of things. And they've been actually really good about that. Now, there is always those loans that do go over a little bit. That is the nature of development financing. But all in all, I was very happy with the meeting, and there isn't anything really groundbreaking to talk about as far as new things that are coming out. It's just going to be more good quality loans. They said they're very busy. They're getting a lot of loan applications. They only take a small amount of the loan applications that they get, but they're continuing to get an inflow of loans. So as a business, they'll continue to source new loans and try to bring more loans to the platform for you as an investor. Second meeting we had was with LoanPad, Louis Schwartz. I got to sit down, have lunch with Louis, and I got to tell you, every time I sit down with Louis, it just really makes me feel good about investing through LoanPad and what he's doing. He's just on top of it. I mean, this guy is on top of it. He wants to continue to just hold the course, and he understands that the interest rates that investors get on LoanPad are on the low end. And with inflation, yes, we are talking about possibly 5 or 6% inflation. However, versus putting your money into the bank, and in my opinion, again, not financial advice, I think this might be the closest thing you could get to leaving your money in a bank account. You're getting 3 to 4%, whichever one you decide. And with a liquidity of good, less than 1 day to get your money out. Nothing has really changed over at LoanPad. I was going to show you the dashboard, but apparently I have to recertify it as an investor, which I've forgotten to do, so I'm not going to show you that. But they are going to possibly be bringing on their 8th lender soon enough, and they are going to be writing one of their biggest loans that they've written with Hanf Capital, who is the OG, the original gangster of LoanPad, the original lender that they work with. Everything is just continuing forward with them. Super exciting. I just, Louis, I always talk about my gut feelings towards people. This is why I go have these meetings face to face. Maybe if I had a face to face meeting with Liam Brook, I would have, of Lendy have known that something was not right there, but I didn't know I was only able to do things over a video call. It's not quite the same. So Louis he's a good guy, and he cares about his investors a lot. He cares about the money. He understands the importance when people entrust as much as they have. We're talking, I think, about over 45, 46 million pounds now. It's come into LoanPad, and Louis takes that very, very, very seriously, and the lenders that he works with, he takes them very seriously too. Does a lot of due diligence, and they continue to grow from strength to strength. So really, really good meeting with them, and I would continue to invest my own personal money through them. Again, not financial advice, but I like it. I like LoanPad. I like what they're doing. By the way, sponsor of the channel, of course, I forgot. Kuflink. Very generous. Sign up today. You could receive up to $4,000 cash back on your first investments as a new investor. Remember, terms and conditions do apply. Your capital is at risk. This is peer-to-peer lending, folks. There is risk involved in it. That's how you are able to get 5, 6, 7, 8% of returns through peer-to-peer lending. Kuflink, again, thank you to Narinda for sponsoring the channel. And finally, third meeting that I had on the 20th of December was with this company right here, P-Lend. And P-Lend has been on my radar a little bit. I have spoken to the team over there a couple of times, and I just thought, you know what, I'm gonna have a sit down with Robert if he was able to do it. Robert Pascoe, I hope I didn't butcher his name. Here he is, this handsome guy right here on the left, Rob. And I didn't unfortunately get to meet with Jamie because he was not around that day, but I did have a really good sit down with Robert. And I tell you what, Robert's, again, another one of these guys that I just had a really good feeling about. And he's very smart. He used to work for Deloitte and Touche. He realized that he didn't want to be chained by the corporate world anymore. It wasn't doing anything for him. So he got together with Jamie, and they came up with this idea for P-Land. Sorry, Plend. I don't know why I keep saying P-Land, which incidentally, if you're wondering where that name come from, it's People Land. I said to him, where'd you come up with this name? Plend. It's kind of a tongue twister. And he said, well, it means People Land. So what they want to do is to create a better way of assessing people's credits for consumer lending, and then offer these loans as peer-to-peer lending. And they're going to be launched. They've been working on this for a while. I think one of their holdup has been FCA regulations. Originally, they were doing it through another authorization, which I believe was through Rebuilding Society. Don't quote me on that. It was something to do with that. And then that didn't work out. The FCA said you got to get your own authorization. So they've been going through that very arduous process of jumping through the FCA's very difficult hoops right now, because the FCA is clamping down a lot on peer-to-peer lending. But P-Lend is finally, looks like that they're at the end of that process, where they're going to be able to launch in March of 2022. And they are going to be lending people money through consumer credits, and they have a very unique way of doing the credit assessment to really reduce the risk on lending to consumers. They're also working with a very big institution, not for institutional finance lending, but the institution is very, very interested in their way of consumer credit lending, which shows that P-Lend is definitely on their way to doing something very innovative. And I like the team. I like Robert. He has really interesting views on what's going on in the economy. And actually him and Louis from LoanPad and I really share a lot of the same views about what's going on, why cryptocurrency is out there. And so, he scores a couple of little extra points. But if you want to sign up, they have quite a lot of people on their early access sign-up list to be notified when they launch. I'll probably be beta testing the UI and the platform myself before they launch, because I offered to do that. I always want to try to see if we can make these platforms better and as easy to use as possible. That's one of the challenges with peer-to-peer lending. Sometimes these platforms can get a little bit overly complicated. Assets capital. I'm not pointing any fingers, but yeah, so P-Land, again, great meeting. I think they're going to be doing some good things in 2022. Probably one of the few new launches that I'm excited about. Even though Robert did mention a couple of other platforms that he thought were interesting. I don't know. I have to do some more research in there before I start talking about it. But great meeting with Robert over there in London. If you have any questions or comments, pop them in the chat. I'm just going to log in to my Assets Capital account so I can show you what the hell is going on over there. Please, again, hit that thumbs up if you haven't already. It helps me out a ton with the YouTube algorithm search. Okay, so Assets Capital, I keep getting questions about, give me an update on Assets Capital. I just want to show you what is going on with my own personal account, because this is from, hopefully you can see this. This is from my manual lending account. And I talked about this a few weeks ago on the stream about how I was concerned about how many of these personal loans that I have in the account have actually been suspended. You can see here, whenever you have a red, this is inside Assets Capital, these are all trading suspended loans for various reasons. Some of them are in default. Some of them are being chased. Some of them may be being paid off. But a lot of them are running into trouble. And you can see if you look down my list, there's just so much red here. And how can this not be considered concerning? Now, I'm not saying that Assets Capital is in trouble. They've done very well with their C-bills. They call it CBLS lending through the government. So I think they're financially robust. But I think some of these loans are mistake loans that have been written. And it's unfortunate. It's unfortunate. But I try to be as transparent as possible, and I want to show you some of my holdings are small. As you can see, this is just 32p. Some of them are 20, 30 pounds. But this is the actual real situation about what's going on at Assets Capital and these manual lending loans. I continue to hold a small investment through Assets Capital, mainly now through the automated accounts. I don't know what's going to happen with some of these loans. The good thing about Assets Capital is you got capital and interest being paid off in most cases. So while the original loan amount might have been, say, £500,000, when some of them get paid down, now maybe outstanding is 200,000 or 300,000, so you have less of a risk involved if they can get recovery on these loans. Oftentimes, well, in some cases, there will be no recovery on these loans. If somebody isn't going to pay back the money, they're not going to pay back the money. It doesn't matter if you have a personal guarantee on them or not. If they don't have the means to pay back the loans, they're not going to pay them back, and investors will unfortunately take the losses of that. But that is just part of the risk that comes along with manual lending, picking out your own loans. And unfortunately, some of the loans are bad. But I did want to show you that because I thought it was interesting what's going on over there. And more will be revealed, hopefully. I'm going to try to get Stuart back on the stream soon. And incidentally, what I'm going to be doing, I think in the next month or two, maybe 6 weeks, is having a panel. I'm going to try to get 3 peer-to-peer lending company heads on at the same time. And we can just kind of have a chat and a panel and do a Q&A. I think that would be pretty interesting. If you think that's a good idea, let me know in the chat. If that's something you would like to see. Maybe we get Louis from LoanPad on, maybe we get Mike Bristow from Crowd Property together, and maybe Rob from Plend together on the stream, and we do a Q&A. That's something I would like to do, just to kind of shed the spotlight more on the peer-to-peer lending sector and get these minds together in one place. Let's take a quick look at, what are we going to look at? Let's look at Wealthsimple. Let me log in here. We're going to talk about Wealthsimple. It was the robo-lending situation that I decided to invest a small amount of money. I knew I wasn't going to put a lot in because there's no point. I did it as an experimentation. Who is this lovely guy over here? So we had anybody that's a Wealthsimple investor, if you don't know what it is, it's a robo investment. You give them the money, they invest it across a bunch of funds for you, different funds. I'll show you what the funds are. But after careful consideration, Wealthsimple decided they are no longer providing investment services in the UK. They are a Canadian company. They said as a result, we will be transferring all eligible accounts to Money Farm. When we launched in the UK 4.5 years ago, we sought to invest in human, simple, extremely low cost. We have valued your continued support in that mission and have enjoyed your being your trusted platform. We are confident that Money Farm is the right partner to continue to support you on your investment journey. Why did they decide to stop it? It says their decision was a result of a shift in focus to our Canadian business for the time being. They don't really specify why they decided to stop. I have my own views and feelings on, why they decided to stop. I think probably the most obvious reason is because the results that they have provided as far as returns have not been that great if you compare it to other methods of investing. And I think as more people become educated in DIY investing and realize that you don't necessarily need a financial advisor. You don't need an actively managed fund. You can use passive funds if you want. And you can get much better results that way. And I think my 4-year experiment, which started on October the 20th of 2017, has shown exactly that. So here is my Wealthsimple account. You can see the portfolio balance of £604. This was started in October of 2017. It started at £450. So it has grown. Any growth return, I guess you could say, as a success. We have returned £154 for a time-weighted return of 34.3% in simple interest over 4 years. Not bad, right? Well, let me show you that. Sorry, I forgot to turn that on. You can see right here, portfolio balance, total return, and the simple interest of 34.3%. Not bad, but if you can, if you compare it to our wonderful Vanguard US Index Equity Tracker, which if we'd have started this exact same date of 2017, which I did hold this back then, but you can see right here, hopefully you can see this, the price is £413 and 4p. If we look at today's last price, which was December the 29th, it's £783. So this has been close to doubling. Not quite double, but very close. So if we look at the final numbers of the return, this doesn't look very good here. You can see Wealth Simple returning here 34%. But our Vanguard US Equity Tracker has absolutely smashed it, 3 times as much, 88% return since October the 20th, 2017. You can see the portfolio value right here. Well, Simple, I got this a little bit wrong. It's not 605. It's actually, is it 605? No, 604. And then Vanguard, our portfolio would have been worth £845 versus Wealth Simple, £605. How we come up with that, sorry for the squiggly handwriting, but this was the best I could do. If we'd have taken £450 and invested it in the Vanguard US Equity Fund, we'd have gotten 1.08 shares of that US Equity Fund because it was valued at £413 at the time. Today's last value of £783. We times 1.08 by that, we get a total here, £845. Our Wealth Simple total was £604. Our Vanguard total was £845. So you can see it's a big difference. It's a big loss in returns that have happened just because we're using a robo fund. Now, one thing that I would say is it's always better to use a robo fund than not invest at all. So if you're scared to invest, use a robo fund. I like robo funds more than I like managed mutual funds or unit trusts. But you can see even in this breakdown of what actually Wealth Simple invested in, they were investing in Vanguard. This VUSEIDA is a Vanguard US Equity Index Tracker. And you can see here it's returned 84%, 83.4%. If you looked at the UK iShares, UK Equity Index, you've only gotten 22.4% over 4 years. So the US equities have just done better. But when a company like Wealth Simple is investing itself in the Vanguard index fund, you know that you're on the right track doing it yourself into the Vanguard fund. But you can see some of these funds have just not done really well. Obviously, the bond funds here, you got the UK government bond fund returning 8.3% because interest rates are crap right now. You've got an emerging markets bond right here. It's done 7.3% over 4 years. Anything bond-wise is not going to do well. But for everybody that says, well, maybe I should be investing in Japanese or emerging markets, you can see here, emerging markets index, only 16.3%. Emerging market Japanese, only 20.6% return. Now, obviously, all we can do is look at the history. We have no guarantee that the US is going to perform better than Japan or emerging markets in the future, but historically it's shown over the last 4 years, and if we go back even further than that, that the US equity market has done very well. So if you are concerned about investing and doing DIY investing yourself, because maybe you say, well, I don't really know enough about investing to do it myself. I mean, here is the proof that we are on the right track. The US equity fund is here. It made up a 16.5% allocation for an 83.4% increase over the 4 years. What are they doing? UK, it's pretty much all passive in here. Indexes, you can see a Monday index, iShares, Gilt index. It's supposed to be low fee That's the idea of this robo investing, is to keep it low fee, hence investing in passive funds, which is what I've always said to you is a good way. If you're an investor and you just want something very simple and low cost, just use something like this US equity Vanguard tracker with 4,034 stocks and a very low charge of 0.1%. So that is going to come to an end. I did call them up and said, hey, I will no longer be needing this fund. I don't want to go to Money Farm. I don't even know what Money Farm is. I'm presuming it's some kind of a passive robo investor company. See our portfolios. Let's see what we got here. Yeah, I mean, it's probably going to be something similar. Yeah, you can see right here. Bonds, blah, blah, developed market equity. I'm sure it's going to be tracker funds. So yeah, you can do it on your own. You don't need a company like Money Farm. You could even just buy a couple of different trackers. If you wanted to do a world tracker, you could do it that way. But Wealthsimple has not been a great success if you think about it. I mean, and if the stock market wasn't doing so well, this time-weighted percentage would not be anywhere close to that. It would probably be, whatever the markets were doing. If the markets were doing bad, this robo tracker wouldn't have done as well, because it's overly diversified. That's the problem. That's the problem with financial advisors. They tend to overly diversify in funds. This was the most aggressive way you could do it, was 80% in equities and shares and 20% in bonds. And now bonds, I've pretty much completely gotten rid of them, because I think they, especially in the UK, are no good anymore, and even in the US. But if you are, oh, by the way, if you do happen to live in the US, which I know a lot of you don't, but if you are watching and you are looking for yields in bonds, there is actually one way that you can get a pretty good yield on a government bond. Now in the UK, the NS&I income bonds are paying absolutely nothing. 0.3% gross, complete waste of time. You're just not getting anything. You're better off going for premium bonds, right? But in the US, you can do these things called I-bonds, which are linked to inflation. And since inflation is raging out of control, at the moment, if you live in the US, you can invest in I-bonds that are paying 7.12%, and those are government-backed bonds, which is insane. Now, as long as the inflation rate continues to rise higher, these bonds are going to do well. Unfortunately, there isn't anything like that in the UK, as far as I know, that is backed by the government. But for anybody watching in the US, check out Series I saving bonds. They are fixed rates for 6 months, and I continue to believe that inflation will continue to rage on forward, and those I bonds will actually be not a bad place to put some money. I wouldn't put a lot in there, because that rate may change or may go lower. Let's look at the trading 212 portfolio very quickly. We have had, again, things have been really jagged up and down. At our high point of 16,900 all the way down to 14,884 is the valuation today of the portfolio. Will continue to keep pushing along. I have made some pretty poor investments. I am human. This goes to show you how difficult it is to pick out individual stocks. Alibaba, 14% in the red. CleanSpark, I think this company will do well once the cryptocurrency market rebounds. I believe in 2020 in January we should see an uptick. That's just my guess, but right now 32% in the red. Comstock Resources Energy, 20% in the red. I think the energy market's having a rough day today because hopefully that is not the plague, but it's saying the winter is going to be warmer this year, so some of the natural energy, gas prices, things may not be as high. So some of these stocks may not do as well, but long-term oil commodities, I think, is going to do well. The radio up 24.9%. Hut 8 mining, pretty much even. Flex 17% in the green. So, yeah, we've definitely had some bum selections. Palantir 25%, but again, these are going to be long-term holds. I think they will do well. Too Low Oil still 16% in the red. And then Vermilion Energy, one we got lucky on, that's done well, 65% in the green. Where are we going to invest in 2022? That is the big question. Everything seems overinflated and a lot of people are scared. Really just stay the course. I mean, dollar or pound cost average. I'll still be buying more cryptocurrencies coming up in 2022. I'll still continue to average every time that I have extra money. I keep a percentage into the Vanguard US Equity Index Fund. Nothing has really changed. There is a case for maybe having, if you believe that the markets are just going to completely tank, maybe some gold, physical gold, as a kind of last resort protection against a crash. You're probably not going to get much of an increase. Who knows? Again, this is pure speculation. I have no idea what's going to happen to these prices. But all we can do is invest in the market that we have. I mean, we've been talking about a stock market correction for years. We had a short one in March 2020 that was very, very brief. We've had, get this, 71 highs in the S&P 500, which is crazy if you think about where we were in March 2020 when people were really concerned about the CVID and what was going on. 71 highs have been created in the S&P 500. So if you'd have sat on the sidelines, 4 or 5 years ago, you really lost out a lot, unless you had the insight to come into the market when it was at its bottom point in 2020 March, which a lot of people didn't. I certainly didn't. I thought it was going a lot lower. So really the investment strategy will remain the same. For me, it's going to be investing in index trackers, continuing to hold equities in oil, energy, maybe some banking if you want to take a portion of your portfolio and invest in individual shares. Again, just know the risk and what happens with these shares. If the markets get hit, your portfolio can really get hit a lot. And then I'll continue to be buying Bitcoin. Is Bitcoin the best place to get the highest returns? No, it's not always. I mean, you're going to see a lot of places. Some of these stupid coins right here, 2,530% return in the last 24 hours. If you're into gambling, there are thousands of cryptocurrencies. Now we've got up to 16,223 coins. It was ridiculous how much crap there is out there in the cryptocurrency market. If you're a believer in Bitcoin, like I am, as a store of value, and continue to do that. Whenever I get some money, I put some allocations into Bitcoin. I bought some when it hit $46,000, $46,900 a couple of days ago. Ethereum, if you want something a little more risky, but nothing has really changed as far as that goes. I'll continue to accumulate Bitcoin with a plan of holding into the next 10 years. Holding a little bit of cash on the sidelines for emergencies. See no interest coming from bank accounts at all whatsoever. There are other places. If you're an advanced investor and you know how to value companies, I'm sure there's plenty of opportunities out there within the stocks and shares market. And then if you really want to take a big gamble, of course, peer-to-peer lending, I think, again, if you look at the top 5 list that we have on Financial Thing, that I have, I think those will continue to be solid investments, along with Blend Network, PropLend, Crowd Property, Kuflink, Unbolted, Lend Invest, not peer-to-peer lending, but I think it's a solid investment. Possibly for the new year, maybe Blend would be worth taking a look at. So that really hasn't changed too much. And then if you really are into gambling, you've got the NFT market on OpenSea. I just wanted to show you, some of the things that are going on in there. Again, I really don't understand what the deal is with this NFT. You've got people who are putting up artwork of numbers here. This is one guy that I watch on YouTube who's created his own set of NFTs. It's basically just an addition of math. You can see the current price of this NFT is $1,836 that somebody is paying for this piece of digital art that could be completely recreated. I don't find any value in it, but again, do you find value in a Louis Vuitton bag? It's all about perception. It's all about how things are marketed. But NFTs, and one of the scary things about this, you can see that the actual price of this NFT has gone down from 1.4 Ethereum, which is over 4,000 US dollars, and now somebody is trying to sell it for half an Ethereum. So there are some really, really risky NFT plays that you could try to get into. Personally, it's not something that I do. I don't really recommend it as a place to go. But I would continue to stick to what you know, and obviously do some learning. There are some new investments that are coming out that I think with some research, things like cryptocurrencies, some of the companies are doing some really good, innovative things. And there is money to be made there if you are willing to take on the risk. You understand what you're getting into and understand what the cryptocurrency companies are actually offering, because not all of them are crap. If we look at the 16,000 coins out here, a lot of them are crap. A lot of them are total actual dog poo. But companies like Solana are offering payment systems that are a lot cheaper than Ethereum. Ethereum is really, again, being used as a payment system for the NFT market, so it has a very heavy use case, but it's very expensive. It's a broken system. Still continues to be valued high. But some of these companies up here, Solana, Terra, Polkadot, Avalanche, are all payment systems that are designed to make cryptocurrency payments cheaper and faster, which is really the one downfall of Bitcoin. It was just not really designed as a payment system. It's too slow. It can only handle a certain amount of transactions per second. But some of these companies are doing really very innovative things. Forget about things like Shiba Inu. It's just nothing at the moment. Polygon, again, payment system. Binance is a very big platform, trading platform. So you can see why they're number 3 right here, because that coin is being utilized every day by the trading platform for transactions, again, with crypto.com. Things like that. So if you do your research, you can find some really good opportunities out there in the cryptocurrency market. Not financial advice, but basically everything is going to continue. We invest in the market that we have. We don't know what's going to happen in 3 months or a week even. Of course, the markets could crash. Everything could crash. We've got terrible problems with inflation. Everything looks overpriced at the moment. But again, we use the market that we have, and by investing whenever you have spare cash or every month, you're going to level out those dips and valleys. And hopefully it won't be so tumultuous to where you have that sinking feeling in your stomach that you're afraid to invest because everything is completely overpriced. Anyway, that's what I got for you today. I hope you're enjoying the stream. Please hit the thumbs up if you are. I'll have a quick look through your comments. If you have any questions or interesting stuff, put it in the comment. I'll pop it up on the screen. We'll talk about it. And I'm a little tired. I will tell you that I got off the plane last night at about 3 a.m. UK time. Managed to get some sleep. Still dealing with a little bit of jet lag, but I do want to come here and do this stream for you because I enjoy it, and I hope you get a lot out of it and the discussions that we have. I really enjoy them, so that's why I do it for you guys, and I hope you get something out of it. Some things about crowd property saying, yeah, it takes ages to get invested. Of course, when you've got a popular peer-to-peer lending platform, the money is going to flow into it, and there's always going to be a difficult balance between the demand and supply. This is something I talked to all 3 of the guys that I met with in London, is about how do you keep that balance. And they all say this is the biggest problem. Louis said he had quite a lot of money sitting on the sidelines at the moment, but this is the reason why he's expanding loan pads lender up to 8, so they'll have plenty of loan opportunities to come in. And by the way, with loan pad too, I talked about that one loan that was in default that is no longer. So right now, LoanPad has 0 loans that are behind or considered technically in default. They managed to clear that one out. He was very excited about that. Bless his little heart. That was pretty cool. So let's see what else you have. Be cautious with planned as a lender. Percent interest you get would be minimal. Lending to unbanked borrowers trying to make ends meet indicates high risk. People with no credit history. Well, I'm not sure that they're investing with people with no credit history. I think they're trying to have a better way of assessing credit versus just on purely a credit score. Because, those credit scores are not always the best way of really evaluating whether somebody can repay a loan or not. But, yeah, as you can see, unsecured lending has not really worked out very well in the past. So maybe Plan can be the ones who can change that due to their innovative way of assessing credit. How is Assets Exchange doing? As far as I know, well. They still continue to write new business. So, again, I'm not invested in them, so I don't know. But I'll be getting Peter back on the stream soon. Yeah, Dave says, if you cannot understand something well enough, do not invest. I think that's good advice. Hi, Mark B. Nice to see you. Welcome. Happy holidays to you. Paul says, remember that company where you can invest in shipping containers? What happened to them? You know, I recall there being something like that. I know the only loan I ever did with shipping containers was through AbleRate, and that loan went. So maybe shipping containers are not the way to go either. And diversification again is key. If you're going to put all your money into one sector or one basket, then you're really high risk. If you'd have had all of your investment money into peer-to-peer lending when the company started to go under, you'd be really regretting it now. So just be sure to diversify. Have some of your money in peer-to-peer lending, some of it in shares and index trackers, some of it in cryptocurrencies. And that way, just cover all of the bases. So if one sector does bad, then you'll be covered on all aspects. Alan said, bad news if LoanPad are increasing their loan sizes. Their largest loans are already more than 5% on the platform. They're not increasing their loan sizes. They're just doing a loan with HAMP that is bigger than their previous loan. So I think they're pretty much keeping the same strategy. But the loan to value on the loan is very good. HAMP is so conservative with their lending. This is a company that I've been and visited them personally. And they're ultra conservative, and they've been able to continually lend out profitably through COVID. So that says a lot about them as a company. Let's see, if HAMP pulls out of LoanPad, Louis will be in a situation he's too reliant on HAMP. Well, yeah, he has 7 lenders. That'll be 8 soon. So I think if Louis thought that HAMP was going to pull out of his business, he would be taking steps to prevent that. So that's never been an issue. He has such a good relationship with HAMP. They've been working together for 12 years prior to LoanPad ever coming into existence. How come Plan will be able to make it work when RateSetter and Zopa can't? First of all, because Plan wants to stay retail. They don't want to become another RateSetter. They don't want to be, I believe, my personal opinion, as big as RateSetter. If you look at a company like LoanPad, right, they've been able to become profitable by staying and finding a way to scale. And this is extremely important. A lot of companies got the scaling wrong. I think RateSetter got the scaling wrong. I think Zopa got the scaling wrong when it came to retail peer-to-peer lending. But LoanPad has gotten the scaling right. So Plan, sorry, Robert, I think we'll figure out how to get the scaling right. There's no guarantee, of course. Maybe they don't make it work, but they have a very big thumbs up from a very big institution that everybody will have heard of. I'm not going to say who it is, who really believes in what they are doing. So we'll see what happens. Time will tell. Can you pay a visit to Blend Network? Yeah, I did. I've been to Blend about 3 times. I haven't recently. I just didn't have enough time. Next time I'm in London, I will do that. And I think, yeah, I'd like to get Mr. Blend on to the panel. Mark says, hi Lawrence, do you think the Vanguard account can keep going at this level? I'm in this account but wondering whether to pull the funds out for some good gains. First of all, there's never anything wrong with pulling out profit. Never. I've made this mistake so much. It's crazy. When oil was on a tear, thankfully I was able to pull some profits, but the second time it went on a tear, I didn't. And I'm looking at some of my shares now that are in the red, wishing that I'd have taken 25-30% of the profits off the top just to lock them in. Didn't do that. There's nothing wrong. It really depends on what your timeline for investing is too. Timing is just so hard to get right. If you're trying to move in and out the markets, it's just next to impossible. There's a lot of unknowns. I mean, I'm on a 10-year investment timeline. Do I think that the Vanguard account will be much higher than it is now in 10 years' time? Absolutely. So, I personally am not trying to time the market, but I think 2022 is really going to depend on what happens with the money printing, this quantitative easing, what happens with the tapering, and then what happens with the vid. If we see this thing start to really kind of dissolve because of the new variant becoming milder and milder as it mutates on, then the economy will really start to take off. If the vid continues to be a problem, the stock market's way just sort of bounce sideways for a while. But again, it's really hard to say. I mean, personally, I'll just stay invested. I have no interest in trying to move in and out the markets and time like my Vanguard buys, just because I have a 10-year timeline. Yeah, inflation's a huge problem. It is. It would be good if you could suggest your top 10 trackers to split an investment over. I wouldn't invest in 10 trackers. I think that what's going to happen is if you invest in 10, you're going to be in the same situation as these robo investors where they're too over diversified. I would just put it in a world tracker if you were just going to buy one. Personally, I just use the US index tracker because I believe in the US markets and the companies that are based in the US. But if you wanted to just shove it in a US tracker or a global tracker, I don't think you need 10. I don't think you need more than 2. Okay, so Legal in General and Vanguard to bond funds in the UK based on inflation-linked bonds. Yeah, I think a late inflation-linked bond might not be a bad way to go if you feel like you need some bond diversification. Thanks for suggesting that. I completely forgot that you could do that. But at least for the next 6 months to a year, I think inflation is going to be bad. So you could make some money on the bonds in that way. And John, look at the breakdowns of the bond. Say like the U.S. The global bond, not the bond, global index equity tracker is broken down to a few different countries, heavily weighted in the U.S. I think about 60%. Then you're going to get your Asia, you're going to get your Europe exposure. It's just the easier way. Mem says NFTs are interesting. Do more on it in the new year. It's so speculative. I'm hesitant to really delve into it because I don't really understand where, these NFT prices are coming from. It's just based all, I guess, on demand and supply, like a cryptocurrency, even just like Bitcoin. But I own one NFT and I've never been able to sell it, so probably was not the right NFT. So speculative, though. Hi, Annabelle. Coming in from Dorset. Yes, it's raining there. I just left. I was down in Dorset for 5 days and it rained. Actually, a week it rained 6 days straight. So, Happy New Year to you. Happy holidays, Ken Wallace. Nice to see you. Thank you for joining. And I think that is going to do it for this week. Listen, everybody, have a very, very happy and safe 2022. Bring in the new year, hopefully, with your friends and family. And it's been a pleasure serving you for the last 5 years. 2021 has been a challenging year, I'm not going to lie. But, hopefully 2022 will be a better year. Please, anything you can do to support the channel. I very much appreciate every single one of you for being here and for continuing to support and continuing to show up every week. And if there's anything that I can do for you, please just reach out, leave a comment on the YouTube channel, join the Discord chat on there, join the Facebook group. And I look forward to continuing to be of service for you in 2022. And the best thing you could do for me is just share the channel with your friends and family and let them know about Financial Thing and let them know about the opportunities out there. Financial education is the key. That's always been my goal, just to financially educate as best as we can, help each other invest. And hopefully we all win. That's what we want. We have no interest in anything other than us all winning and all being successful. So, Happy New Year. I will see you in 2022, same time next Thursday, God willing. Blessings to you all. Have a great evening. Be safe. Stay away from the vid. And much love. Love you all. I really do. I mean that from the bottom of my heart. So I will see you next time. Take care.